and welcome to J. Kumar Infraprojects Limited Q4 and FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. This presentation, which J. Kumar Infraprojects has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning J. Kumar Infraprojects' business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Kamal Gupta, MD, J. Kumar Infraprojects Limited. Thank you, and over to you, sir.
Good evening, everyone. On behalf of J. Kumar Infraprojects, I, Kamal Gupta, welcome everyone to the Q4 and FY23 earning conference call of the company. Joining me on this call is Nalin Gupta, MD, Mr. Madan Bia, FO, and our IR team. I hope everyone had an opportunity to look at our results. The presentation and press release have been uploaded on the stock.
I'm sorry, sir. Sir, there is a disturbance on the line when you're talking. So I will disconnect you and connect you back, sir, in that case, because we are not able to hear you clearly.
Oh, is it?
Yes, sir. Ladies and gentlemen, please stay connected while I try to reconnect the management again. Thank you. Ladies and gentlemen, thank you for patiently holding. The line for the management has been connected. Over to you, sir.
Thank you, Michelle. Good afternoon, everyone. On behalf of J. Kumar Infraprojects, I welcome everyone to the Q4 and FY23 earnings conference call of the company. Joining me on this is Mr. Nalin Gupta, MD, Mr. Madan Biani, CFO, and our IR team. I hope everyone had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and on our company website. The performance of FY23 had been remarkable, and we continue to accelerate the profitable growth and build our position as a leading urban infrastructure EPC company. We are excited to deliver another year of healthy performance with stable EBITDA margins and debt levels. We are witnessing strong execution momentum across our projects and are focused to create value to all our stakeholders. The recent union budget has, with highest ever capital outlay of 10 lakh crore, clearly reiterates government's focus towards building a world-class infrastructure in the country. J. Kumar, with its execution track record and sound financial health, will be clear beneficiary of the government continuous impetus. We have received appointed date of Vadodara Mumbai Expressway project of NHAI on Jan 19, 2023. Awarded projects of around 499, that is 500 crores in Q4 FY23. Further, we are in the process of constructing a further 61 kilometers of metro rail network across India. Coming to the performance highlights for FY23, the revenue from operations for FY23 grew by 19% to 4,203 crores as compared to 3,500 crores in the preceding year. EBITDA for FY23 grew by 18% to 597 crores, and the PAT for FY23 had gone up by 33% to 274 crores. The PAT margin for FY23 stood at 6.5% as compared to 5.8% in preceding FY22. The order book position as on 31st March 2023 stands at 11,854 crores. The order book includes metro projects contributing around 53%, while flyover bridges and roads other put together is 36%, and others are 11%. I'm also glad to share that the ROE has increased in FY20, improving in FY23 to 12.4% from 10.4%. Also happy to share that ROC is also improved for FY23 to 17.6% as compared to 15.2% in the preceding year. The Board of Directors has recommended dividend of rupees 3.5 per equity share of 5 each, subject to the approval of the shareholders at the issuing AGM of the company. Before taking the Q&A, we would like to emphasize that our robust execution capabilities coupled with strong execution of asset base and enabling efficient execution will translate a strong revenue growth in coming years. We are aggressively targeting projects which we believe will help us to maintain our current growth and margin profile. We are confident of being awarded projects in excess of 5,000 crores during FY24. The company has sufficient cash as well as unutilized working capital facilities to undertake large projects and also to ramp up execution of current projects. Thank you, and now we can start the question and answer session, please.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wishes to ask a question may press star and 1 now. We have the first question from the line of Shikha Mehta from Equity Capital. Please go ahead.
Hello, sir. Congratulations on a great set of numbers. I just have a couple of questions. So can you help us understand how FY24 is going to look from a revenue margin, from a revenue growth perspective and from a margin perspective? That's number one. And number two, can you help me with how our order book on the metro side has moved up from FY21 to 22 to 23 now?
Sorry, Shika, you are asking the second point is order book position as on last 3 years, right? Metro.
Only for metros, right?
Oh. Metro. Do we have the separate number here? Well, so if you see the order, we'll have to exactly work out the metro order book numbers. Give us some minutes for that. And for the margin, we are expecting for metro specific. She wants metro specific number. Okay. We'll have to work out, Shika, the metro growth that has been there in the order book. But if you look at the order book, which is 11,854 crores as of now, 54% of the order book comes in from the metro sector as of now, as on today.
So, I'll tell you why I was asking this question. From what I'm understanding, especially in Maharashtra, the competition on the metro side is getting a bit stiff, which earlier used to be kind of a monopoly situation for us. So if you can help me understand that a bit better, it would be helpful.
Well, I would say that metro sector is an area where there are limited contractors pan India. Though the competition level exists, I will deny to that. But it is a very core competency area where you have limited players executing that size of projects, whether it is elevated or underground. So currently also as J. Kumar, we are executing works in Bombay, Pune, Nagpur, Surat, Ahmedabad, Delhi, New Bombay. So metro projects, I would say there are certain areas where the local players who qualify into the smaller ticket size are more active. But if you look at the larger ticket sizes where 1,000 plus size of metro projects, there are around 7 to 8 active metro players who are capable and who are qualifying into such sector. So though competition is there, but the metro sector, the opportunity is pretty high. And even now, there is an allocation close to around 20,000 crores, which has been allocated only for metro sector. So the opportunity is quite wide. And I think looking at the company's appetite, we are very confident of getting a reasonable size of orders from the metro sector. Though we have a very diversified areas of operation as of now.
So our key area of competence would be between 1,000 crore to 2,000 crore orders, right? That's the right way to look at it, right? Because 2,000 crore onwards, again, we'd need a partner to tie up with, right?
No, I would slightly differ with your point, Shika, because J. Kumar, we have been bagging orders of 2,000 crore is Metro Line 9, which we have bagged on a standalone basis. And with the execution of Metro Line 3, that we have already, which is 86% completed, we will be entitled to take up the jobs of bigger magnitude up till 3,000, 4,000 crore as well on a standalone basis.
Got it. Okay, sir. Thank you so much. And if you can just give guidance for FY24 on revenue growth and what margins we should look at.
So we have been growing on an average at the rate of 15% CAGR. And we expect that the revenue growth for the FY24 and 25 would be around 15% on a year-on-year basis. And margins will be around 14% to 15%.
Okay, great. Got it. Thank you so much. I'll come back in the queue.
Thank you.
Thank you.
Before we take the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, before asking the question, just on the number front, just trying to understand, it seems there is a significant increase in scope of work in our existing orders. So as on December, our order book was 11,209 crore. Now 11,800, so 645 crore addition increase, and we did a revenue of 1,134 crore. Order inflow in fourth quarter was 500 odd crore. So significant difference. It seems that across the board we should have seen an increase in scope of work. So if you can help me, how much increase in scope of work we have taken in the fourth quarter and for the entire FY23?
You're right, Shravan. So we do correction at the end of the year every year. And so we do announce whatever orders are directly awarded to us. Plus, there's price escalation clause, as we always been saying, like all our contracts do cover price escalation clause. So there is some 660 crores of price escalation plus some variation and changing scope of the work, that is additional work of and utility. So that all combined comes to around 200 crores, which has been added in the year end. And this is a regular thing we do year on year.
Okay. Got it. Second thing is, sir, for this fourth quarter particularly, so any specific project or where we have seen, so actually the growth for this quarter is just a 2%. Definitely for full year it is a 19%, but fourth quarter it is much lower. So any specific reason you want to attribute why we have seen a slow growth in fourth quarter?
So if you see, the Q3 was really very good, and Q4 also we have done nice. If you see year on year, as you rightly noticed, there is a rise of almost 19%. So we have to see the aggregate figures only always, the combined figure of the year, which is very good. Okay, in terms of top line also and bottom line margins also. And coming to the second point was Q4. No, that was done. What was the second point, Shravan?
Yeah. So that was any specific reason that you mentioned that one has to look at the yearly number and not quarterly number. So that I got it.
Okay.
So next question is in terms of the order inflow, sir. So last time also we were looking at close to 5,000 odd crore. We got 2,652 odd crore. And now, so just trying to understand this 5,000 plus crore that we are looking for this year. Will it be spread across, or and at the same time in terms of the opportunity where we have bidded, is there any L1? How confident are we that we are able to get more than 5,000 odd crore?
Well, so Shravan, we are already L1 in two projects, one of 100 crore and one of 386 crore. So where we have already been declared as L1, and in the Q1 we should get the order for this. This is one part. With regards to the slow inflow of orders for the last year, what we expected was, we agree, but it is mainly because of the delay of submission of the tenders, which was being postponed by the departments. So we have already submitted it, bid of around 16,000 crores, which was for C3 for the high-speed railway. The bid has already been submitted. So the bid submission got postponed, and that's how the L1 has not been declared. But we expect by June, this tenders, by mid of June, these tenders will be opened. And we are quite hopeful about that job, as well as there are some other jobs of road tunneling, metros, NHI that we have been bidding. And the bid submission has been delayed. That's how this FY23 order book stood at 2,600 crore that we bagged, and another 500 crores that we are L1 into, so 3,100 crores. But this year we are very sure, because the ticket size that J. Kumar is looking at, and the average ticket size is 1,000 to 5,000 crores minimum. So in that situation, one or two orders that we are looking at striking would take the order book requirement to the figures that we are expecting.
That is great. Sir, this 16,000 crore, is this the single package, and have we bidded through the JV? So what would be our share?
So it's a 16,000 crore single project. It's an elevated corridor for the last leg of the Ahmedabad-Bombay bullet train. And it's in joint venture with one more party, where J. Kumar share stands at 40%. So even if we are L1 in one this tender, our share goes up by 6,000 crores.
Okay. And we will be doing only 40% and not the higher. So for technical participant, definitely we did a JV, but for execution purpose also, it will be the 40% share that we will be booking as a revenue.
So this is the understanding as per the joint venture which we have done. It's a business call that we have taken. And if you talk of 40% also, you are talking of around 6,400 crores, single job of at one location. So I think that's a good respectable number that we have finalized as a business call.
Okay, got it. Lastly, two questions on the first is on the capex, and the second will be the mobilization, retention, and unbilled revenue as on March. So capex was slightly higher for FY23 versus we were looking at 150 odd crore, 232 odd crore we have done. So what's the number for FY24? And if we get this bullet train, let's say, so then how one can look at in terms of the capex for FY24, 25?
For FY23, we have done a capex of 230 crores. So, we are expecting around 150. And this is mainly because of an additional of 1 TBM, which was added to this. So 150 and plus this. And we have the new casting yard at Porbandar for multiple metro projects. So we are that line for the casting yard, we have around 25 crores. So that's 230. And for FY24, we are contemplating around 150 crores of capex, which includes your maintenance capex of 5% plus some incremental capex.
Okay, but we will not be needing a significant, let's say, if we get this bullet train, then also in terms of the capex, how one can look at?
Yeah, if we get bullet train, the capex would surely increase because it's a different nature of job, and the machineries and capital capex required for that project would be surely different because it is project specific. Like an underground metro, you require TBMs. In this case, you will need different type of set of capex that's required. So the capex would be pretty high as compared to what we are talking right now. But that would be spread and it would be required because of the nature of job.
Got it. And lastly, the numbers on
costing. It has already been taken care in the costing.
True. Lastly, the numbers on mobilization advance, retention money, unbilled revenue for as on March.
Outstanding mobilization advance stands at 548 crores.
Okay. Retention money?
Retention is 267 crores.
Yeah, that is the receivable part, and the payable part is 212 crores.
And unbilled revenue?
Unbilled revenue is in the range of this 546 crores.
Sorry, 546.
46 crores, yeah.
Okay, and the date of likely to remain at current levels of 500 odd crores?
Sorry, Shravan, what did you say?
Date level, which is currently at 516 odd crores, so likely to remain at this level, or we can see
that will be around same level for the coming year as well. Yeah.
And the working capital will also remain in the same range, or some improvement can be expected.
So working capital, as we have been always saying, we want to maintain 120 days. We are today also at 126 days. So selling in the same range. And of course, we have to further improve and try to do 120, so 125, 126.
Okay. Thank you and all the best, sir.
Thank you, Shravan.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Nikhil Kanodia from HDFC Securities Limited. Please go ahead.
Good afternoon, sir. I'm audible.
Yeah, very much, Mr. Nikhil.
Yeah. So first of all, congratulations on the good set of numbers. So my question was on the status of the metro construction that is going on. So if you can give us the as on date status and also the expected date, like the commercial operation date for the metro projects.
So, metro, all the projects are going in full swing. the Line 3 metro, which is underground from Kolaba to Sheet. So 86% of both the packages are completed, which is done by J. Kumar. And MMRC, and we see that MMRC is planning to open the first phase from Sheets to BKC by the end of this year. So that's a very advanced stage. And all other lines also are going in full swing. Whether it's Line 9, Line 2B, Line 6, Navi Mumbai Metro, Pune Metro, Delhi, Surat. All the metros are going full swing. So every year, you will see this part of the metro lines getting operational to people.
Okay. And sir, in all these lines similar to line 2 and 7, so we won't be having any, even if there is a delay, that won't be affecting us, right? Because the contract would be to hand over the metro lines to the government, and we don't have a say in the operational revenue, correct?
So all the metro lines that has been there, the type of construction is similar. So of course, due to working in urban area, there are some delays, but it does not impact anywhere in terms of our bottom line or top line. So right now also, this Pune Metro is we have erected the last span of Pune Metro as well. So we'll be handing from our side to the department for operational other completions, which will be done by June end. So Pune Metro will also be completed by June end is what.
And so coming to your point also, Nikhil, first of all our contracts are covered with price escalation clause. So any delay because of any other reasons does not affect us. Secondly, what was your point is if they are taking time in operational, the department, will it affect us? Am I right?
Correct.
Yeah. So if our major work is completed, we do demobilize our resources from the site. So our overheads go down, apart from some maintenance staff. So it does not affect our bottom line.
Okay. Understood. Sir, if you can give us the amount of the bid pipeline that you have.
We have already bidded for around 12,000 plus crores of projects. We have already been bidded, as Nalin had already shared, HSR project of 16,000, where our share is 6,200, plus some NHI projects of flyover bridges in Chennai, plus also some underground metro projects, plus some flyover projects other places. So all put together, 12,000 crores projects have already been bidded, and bid line is around 40,000 plus crores of projects we plan to bid in this year.
Okay. 40,000 you said, right?
Yeah.
Okay, so and sir, the other question was on the trade receivable fund. So if you can give me what is the value that is outstanding as on date, because this becomes a kind of a concerning level.
It's 1141 crores.
That was as on March. So I believe after that we would have received some of the other payments, because for the infra it would be lumpy kind of thing at the year end. So if you would have received, so as on date, what is the receivable amount? So whether it has gone down.
540 crores of 1100 crores until now.
540 crores.
Yeah.
Okay, sir. Those were my questions. In case if I have any of them, I'll get back in the queue. Thank you and all the best.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi Shares. Please go ahead.
Yeah, good afternoon. Thank you for taking my question. Sir,
I'm sorry, Mr. Khurana, your audio is too low, sir. We are not able to hear you.
Yes.
Can you please switch to your handset?
Hello, am I audible now?
Yes, sir. Please proceed.
Yeah. Good afternoon. Thank you for taking my questions. So to begin with, I just want to have some clarity on this 40,000 odd crore rupees of bids that you spoke about that you intend to kind of place this year. So this 40 would include the 12,000 that are the bids that have already been placed, or this is over and about 12,000 of bids which are awaiting outcomes?
So Prem, this is in addition to the 12,000 crores of projects what we have bidded.
Sure. And so I think last quarter we were planning to bid for some of these projects, like let's say GMLR and all. There was some Orange Gate project as well. Any update on these? If you want to share, especially on GMLR, and also if you could highlight, we did not see you participate for the Borivali tunneling projects. we could have gone with some partner and qualify and also bid, because these were kind of an area of our interest only, tunneling jobs, which is where we specialize. But we did not see your name, so we could help us understand why we did not go and bid for these projects. The Borivali tunnels and then GMLR. You could help us with the status, please.
So there was a particular clause which was there in the contract which did not allow us to qualify for the job. Though we are qualified in GMLR and the other large-scale projects which are coming up, like MSRDC has come up with 3 outer ring roads and of Pune, Jalgaon and Virar Alibag. So there are a lot of opportunities on that line as well, which is around 35,000 crores worth of project only in that area. Again, Kanpur Metro has come up. The bids are all available now. Bhopal is there. Indore is there. So we are bidding for those jobs as well. So particular that Thana Borivali we were not getting qualified on it. There were some specific requirements for that project. That's why we missed bidding it out.
Sure. And how about Dahisar Coastal Road? That again was on our radar, right? Almost around 3,500 crore rupees worth of package. What's the status there now?
So GMLR and Dahisar, the tender is getting extended due to some internal reasons of department. So whenever the bid is submitted, the final date is there, we'll be bidding for that job.
Sure. And is it fair to assume, at least for GMLR and Dahisar, we would go solo, or we planning to tie up with someone to kind of go and bid for these? Because these are again large, so whether you would want to go solo or take someone along with you?
We'll take a call at the time of bidding, that time,
Sure, sir. Directly. And sir, just one last question. I think if you could help us give us the status for Setco Coastal Road. I think it was supposed to start by March 23. In terms of construction activity, we were facing some delays there in terms of clearances from authorities. The 480
so that's the only project which has not started in our order book, costing 500 some odd crores. And it will still take a couple of more months to actually start the work. We have already mobilized the people, casting yard is on. So casting yard is almost 50% done. The designs are done, the investigations are done. And so it is in last stage of approval in the court. So we expect it to be done in 1.5 months time frame.
Sure. And sir, any pending mobilization advances that we would be able to draw? So besides this 548 crore rupees that is already available with us?
We do have provision to take additional some 250 crores of more, but we don't intend to take it now for the moment.
Okay, sir. Sure. Thank you. That's it my end, and all the very best for future.
Thank you.
Thank you. The next question is from the line of Ankit Babel from Shubhkam Ventures. Please go ahead.
Sir, good afternoon. A lot of my questions have already been asked, a couple of more. So this capex of 150 crores, which you envisage for this year, now this would be funded through internal accruals, or you'll need to take a debt for it?
So usually for this capex, we do fund partly internally, and the part we take long-term loan for this. So which are paid in installments for the equipment, major equipment.
Okay. And sir, what would be the additional capex required if you get the bullet train project?
So, cannot emphasize now, my dear, because right now also in 150 we have emphasized some part of it for the new project. So as Nalin has already shared with you that for this HSR there will be some additional capex apart from 150. So which will be spread in coming 3-4 years. So we'll be doing every year on year.
So what I was trying to figure out was that by the end of FY24, where do you see your debt profile? Because this year also it has increased.
150, so HSR and this is stuff. So at 24 maybe it is around 200 or so. And that will be at a similar levels of 500, 525. Today what we are.
Okay, so you expect that the internal accruals will take care of the capex and the working capital requirements, and that might remain at the
for working capital, working capital as our debt won't go up. We are expecting 500 to 550 crores of debt only by the year end of FY24. The capex may be like, around 200 crores if we get this additional work.
No, from debt I was trying to understand on the net debt part. So you have a cash also. So net debt you expect to remain same?
Yeah, no. There won't be any increase on that.
Okay. My second question is, in spite of a decent growth and reasonable margins, your ROEs have always been very low. Is the management putting any efforts to improve the same? And if
so, Ankit, we already shared in our addressing. So ROE and ROC both has gone up. If you see, the ROE has gone up to 12.4% as compared to 10.4% in the previous year, and the ROC has gone up to 17.6% in this year as compared to 15.2% previous. So it is really at a jump of 2% in both. 20%. But 20% in both of these.
But where do you see your ROEs in the next couple of years? I mean, because the reasonable expectations is somewhere around 17-18% from an infra company. So, I mean, what are your projections or,
so
where you... Yeah, please.
Already, we are at 17% in terms of ROC, and ROE we are at 12, and it has a good rise from last year, and we are further, also year on year, we are planning to see that there will be a growth in terms of improved percentage in terms of ROC and ROE both.
Sir, the participant has left the queue. We move on to the next question, which is from the line of Vasudev from Nuvama. Please go ahead.
Yeah, thank you for the opportunity, sir. So most of my questions are answered. Just if you can give the project status for Dwarka Expressway, Meethi Package 4 and Sivri Worli.
Projected? What? Projected what?
The current status of these projects.
Of Dwarka Expressway?
Yeah, the Dwarka Expressway, the Meethi Package 4 and the Sivri Worli project.
Okay. So Dwarka project is going in full swing, and they plan to open it in this year only in operation. So we were given some additional change of scope work of 550 crores. So right now, putting both the projects together, one project is completed 84%, and the other is some 50%. So both put together is around 65%. Project is completed, and we will open it partially in coming 3 months. Partial part of Dwarka will be operational in coming 3 months, and by year end the whole project should get completed. Coming to Sivri Worli, as of the moment, it is completed. 47% is completed of Sivri Worli. That project is also going well. So, but it should take another 1.5 years to get completed and put into operation. So, part of it again will be put into operation before connecting to MTHL.
And from Meethi Package 4 that you are talking of, we have already completed 30% progress in that. We have completed 2 shafts and the PGM is running at a very good speed. So we have already achieved 30% and the work is in full swing on that project.
Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Nikhil Kanodia from HDFC Securities Limited. Please go ahead.
Thank you for the follow-up opportunity.
I'm sorry to interrupt. Sir, I would request you to please mute yourself when the management is speaking, because we are getting a lot of background disturbance from your line. Thank you. Please proceed with your question.
Okay. So thank you for the follow-up opportunity. Just wanted to, if I've heard correctly, you said that whenever any capex is there, there would be 2 sources. One would be from the internal accruals and the second would be the long-term debt, right?
Correct.
So, sir, I just wanted to understand what is the sanction limit that we have on the fund-based limits, and also what is the kind of utilization that we are currently working at?
So sanction limit for fund-based is 637 crores, and we have utilized 394. So 62% is utilized.
Okay. And so what would be the approx rate of interest on this long-term debt?
9 to 10% is our interest rate, for year on year.
Okay. And everything, all this would be a rupee term loan, right? Entire 394 crore would be a rupee term loan.
Rupee term, yeah, all rupee term. 100%.
So what is the sanctioned non-fund based limits?
Sanction long is 3,300 crores and utilized is 2,600 crores. So 80% is utilized in non-fund based.
Sir, can you please repeat those amounts?
3,280 crores is sanctioned limit for non-fund based and utilized is 80%. That is 2,630 crores.
Okay, sir. Understood. So those are my questions and thank you.
Okay. Thank you, Nikhil.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Khushbu Gandhi from Yes Securities. Please go ahead. Ms. Gandhi?
Hello, can you hear me?
Yes, ma'am. Please continue.
Yeah. So thank you for giving me the opportunity. So just one question from my side. Any update on the Bangalore Metro project? Because recently the Karnataka government announced that they will be stopping the funding for the new metro projects and the infra projects whichever has been issued by the old government. So any update whether we'll be carrying on the work over there or not?
So it's two projects put together where J. Kumar's we have the order book of around 250 crores from that area. So we are very hopeful that the work should go on because we don't see anything really on that line because it's not a very huge order to be concerned about. So we are if we get the order execution, it's fine. Even if we don't get it, it doesn't bother because it's just 250 crores, which is 2% of the order book of J. Kumar. So it is not a bothering figure for us. But we are not hearing anything as of now that the work will not be done.
Okay, sir. Thank you.
Yeah.
Thank you. Participants who wishes to ask a question may press star and one now. The next question is from the line of Arpit Rathod, an individual investor. Please go ahead.
Good afternoon, sir.
Very good afternoon.
The debtors level as compared to March 22, there's a increase. So are we facing any challenges with regards to collection? And if you can provide me with the figure as to how much of the receivable as of March is collected till date?
No, absolutely no challenge in terms of collections or so. Like even if 1140 crores outstanding we had on March 2023, and we have received almost 540 odd crores from the period 1st April to till date. So in EPC industry, it's a little cyclical. You cannot go on a straight line basis. Also, if you see our revenue has increased, so debtors in terms of number of days, working capital in terms of number of days remains same, and we endeavor to further reduce it. So we have no concerns on debtors. Post collection in the month of April, May, I have left with only 600 crores out of my March figure. So there is no concern.
Sure. Thank you. That's it from my side.
Okay.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, this two line 3, both the packages, so around 770 odd crore is remaining order book. So in terms of from our side, when this will likely to be completed?
You know, as the government has also announced and NMRC is also looking to open this by year end. So we also are sure that by this year end, our entire project will be completed.
Okay, that's great. And this Mira Bhayandar line 9, so definitely it has a two components. So that part is around 1,000 odd crore originally out of 2,000. So there, when we are likely to complete this Mira Bhayandar part?
Yeah, so Mira Bhayandar part, we are expecting that another 1 to 1.5 years, we should be able to complete the entire thing because 1.8 kilometer, which the depot line which goes at the end of the Bhayandar side, was not handed over to us because of the depot land issue. But that depot land has also been approved by the government and now it has been shifted to Dongri. So that line also will be starting very soon. So As far as the elevated section is expected, it would take 1.5 years. And for the underground section, we would require another 2 to 2.5 years, because there we have already, there was some issue with the airport authority land, because of which the project was not started. Now we have started the lowering of the TBM as well. The shaft is already excavated and is ready to receive the TBM.
Okay, and these both Dwarka packages 1 and 2 with increase in scope. So now remaining I can look at close to 1290 odd crore. So this will be by year end, this will be over?
Yeah, so by year end, 95%, 90% of the project will be done.
Okay. Yeah. Great, sir. Thank you.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone now. As there are no further questions from the participants, with that, I would now like to hand the conference over to Mr. Kamal Gupta for closing comments. Over to you, sir.
Yeah, I would like to thank once again to all of you for joining us on the call today. We hope we have been able to answer your queries. Please feel free to reach out to our CFO or IR team for any clarifications or feedback. Thank you all. Thank you so much.
Thank you, sir. On behalf of J. Kumar Infraprojects Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.